All right, listen up, my little money monkeys, because today Money Monkey is going to show you something very important. Most people think the secret to financial freedom is one big, lucky investment. One stock that explodes. One crypto that goes to the moon. One business idea that suddenly makes them rich. But that's not how wealth is built in the real world. Real wealth is usually built quietly, slowly, through multiple streams of income working together over many years. And today, Money Monkey is going to show you 5 income streams that can help you build long-term wealth. Not get-rich-quick nonsense. Just practical strategies that normal people have used for decades. Now imagine this. You wake up in the morning. You make coffee. You sit down at your wooden desk in the jungle. Money Monkey opens his laptop, checks his accounts, and sees money coming in. Not from one job, but from several different sources. That's the goal, because relying on only one paycheck is risky. If that paycheck disappears, everything disappears with it. Many people work hard for 20 or 30 years. Good salary, nice house, nice car, but they only have one income source, their job. And the problem with that system is simple. You are trading time for money. No time, no money. But investors think differently. They build systems where money can come from multiple places. Let's break down 5 realistic income streams that many long-term investors use. And yes, even a banana-eating investor monkey understands this. First income stream, real estate. Real estate has been one of the most common ways people build long-term wealth for decades. The idea is simple. You buy property. Over time, the property can increase in value. And if you rent it out, you may also receive monthly rental income. Many investors start small, sometimes with a first home. Then later they move to another home and rent the first one out. Over many years, some people slowly build a small portfolio of properties. Now let's be clear. Real estate is not guaranteed money. Property prices can fall. Maintenance costs exist. Tenants sometimes move out. But historically, property in many developed countries has increased in value over long time periods. And rental income can become an additional cash flow stream. Second income stream, investing in the stock market. Now this is where Money Monkey gets very interested, because the stock market is one of the most accessible wealth-building tools ever created. When you buy a stock, you are buying a small piece of a company. Companies like Apple, Microsoft, or Coca-Cola. If the companies grow, your investment grows. But for beginners, picking individual stocks can be difficult. And that's why many long-term investors use ETFs. ETFs are exchange-traded funds. Instead of buying one company, you buy hundreds or even thousands at once. For example, an ETF that tracks the S&P 500 contains shares of around 500 large U.S. companies. This spreads risk and makes investing much simpler. Historically, the U.S. stock market has returned roughly around 7 to 10% per year on average over very long periods. Not every year. Some years the market drops, but over decades the trend has been upward. And this is where something powerful happens. Compound growth. Your money earns returns. Those returns stay invested, and then they generate even more returns. Money making more money, and then even more money. Money Monkey calls this the banana tree effect. Plant a banana tree today, and if you give it time, eventually you get a whole jungle. Third income stream, selling or trading collectible assets. Now this one is interesting. Some people turn hobbies into income streams. For example, watches, classic cars, collectibles, art, or trading cards. People who deeply understand a niche market can sometimes buy undervalued items and later sell them for profit. But this only works if you truly understand the market. And it takes time to learn. Money Monkey always warns beginners about this. Never buy collectibles purely as investments unless you really understand the market. But if you already love a hobby and know the prices well, sometimes it can become an additional side income. Fourth income stream, knowledge. Yes, Knowledge can become an income stream. Many people build businesses around teaching or consulting, helping others with skills they have learned over many years. Financial coaching, business consulting, career coaching, education. The internet has made this easier than ever. But remember, real value matters. Good advice must be practical and honest. No fake promises. No unrealistic guarantees. Just helping people make better financial decisions. Fifth income stream, content creation. And this is where Money Monkey is currently sitting, right here in the Jungle Studio. Platforms like YouTube allow people to create educational content. If enough people watch and find value, income can come from ads, partnerships, or digital products. But let's be honest again. Building a successful YouTube channel takes time, consistency, and a lot of patience. Most channels never grow large. But if you enjoy teaching or sharing knowledge, it can become another long-term opportunity. Now here is the important lesson. None of these income streams work overnight. Every single one requires time, years, sometimes decades. That is the part most people don't want to hear. But it's also the reason long-term investors win, because they stay patient. Let's look at a simple example. Imagine you invest $300 per month into a diversified ETF portfolio. If that portfolio grows at an average of about 8% per year, after 10 years, you would have invested $36,000. But the portfolio would be worth roughly $55,000. After 20 years, you would have invested $72,000. But the portfolio could grow to around $170,000. After 30 years, your total contributions would be $108,000. But the portfolio could grow to more than $400,000. That is the power of compounding. Not magic, just math and time. Now imagine that investment working alongside other income streams. Maybe a rental property, maybe a small consulting business, maybe dividend income from ETFs. That's when financial stability starts to appear. Multiple small rivers flowing into one big financial jungle. So here is Money Monkey's advice for beginners. First, build a financial plan. Know how much money comes in. Know how much goes out. Most people never even calculate this. Second, start investing regularly. Small amounts are fine. Consistency matters more than size. Third, focus on long-term assets, stocks, ETFs, real estate, things that historically grow over time. Fourth, avoid hype. The internet is full of people promising fast wealth. Real wealth rarely works like that. And finally, give your investments time. Because time is the most powerful tool any investor has. Money Monkey always says this. You don't need to be a genius to build wealth. You just need patience, discipline, and a simple strategy. If a monkey sitting in a jungle surrounded by charts can understand long-term investing, then you definitely can too. So start small, stay consistent, let your money grow. And over time, you might look back one day and realize something amazing. Your money is finally working harder than you are. And that, my little money monkeys, is when financial freedom starts to become real. This is Money Monkey, and I'll see you in the next video. Monkey Money Bag.